Hello there. Today is Friday, June 13th, and this is the Kluge Wealth Advisory Group Client Connect video for the mid-month for June 2025. In this video, we're going to cover off a couple of things. The first is a quick portfolio update, and then I'm going to talk about the most frequently asked question that we've seen in our client conversations over the last couple of weeks. So without any further ado, let's jump right into it. Now, in terms of a quick portfolio update, I did want to highlight a couple of points. The first being that, as we've mentioned in previous videos, we are doing a top to bottom, bottom to top rework of the portfolio so that we're aligned with what I believe are current market conditions and forward market conditions. Now, part of that involves some changes on the fixed income side. We'll be removing a position in the Fidelity Multi-Sector Bond Fund and replacing it with a BlackRock product that I believe will be able to perform better in this environment going forward. Also, we've made a few changes on the stock side to get exposure to areas where I think we'll do better as the economy and markets continue to evolve in the way in which they have been. Now, specifically, we've done a couple of things. As I mentioned, we removed that Fidelity Multi-Sector Bond Fund and replaced it with a BlackRock product. We also have removed a position in S&P Global, which is a credit rating and capital markets business, and replaced it with a position in D.R. Horton, which is a U.S. home builder. And to tamp down on some potential political risk, we have removed the small position we started with Walmart. So again, really what this comes down to is we are in a bit of a fluid situation overall with markets and economy, and we want to be driving out of the windshield and making sure that we're making portfolio changes we think that'll align with the way things are going. Now, again, as I mentioned earlier, in a frequently asked question, I'll get into some of the more details and some of the drivers of these changes, but I just wanted to give everyone a quick overview and that let you know that we are constantly paying attention to everything and making sure that we're making the adjustments as necessary. So in terms of frequently asked questions, one of the most frequently asked questions that I encountered over the course of client conversations here in the last couple of weeks was about what the outlook is. We know that we've come to a place where the year started out good, very quickly deteriorated, and with a culmination of that weakness on April 7th and 8th, and then we've since then seen a full recovery, and in some cases, depending on which model we're discussing, you may actually be even a little bit higher here on a year-to-date basis. So with all these things in mind and all of the news headlines and such that have been swirling around, we did see a lot of questions about what is the outlook from here. So the bottom line is that based on the indicators that I have available to me and that have proven valuable in my decision-making process here over the last 5 years and even longer, but especially in the last 5 years, I have to be optimistic. There's just no other way to put it. When we take a look at studies of sentiment, when investors have felt like this in the past, when we take a look at studies of quantitative pattern, right, how did the market act in the run-up to where we are now from the April 7th and 8th lows, and when we take a look at studies of available money supply, which is a big fuel for both the economy and the markets, I'm forced to be positive because all of those things are facing in a positive direction. When investors are very negative on the future, almost always markets are positive. When we have the combination of technical and quantitative patterns in price and volume that we've seen off the April 7th, 8th lows, markets have almost always been positive. And when we've seen an increase in the available amount of money in the world, which we have over the last few weeks, then markets and the economy has almost always been positive. So although this time could be different, we have three major sets of indicators all pointing in the same direction, and that is that things should continue to get better. Now, I also want to bring another perspective to play and say that there is also something more fundamental here, and that is that the companies that are driving the market, driving the economy, whether we're talking about small business, whether you're talking about giant corporations, over the last 5 years, they've managed to navigate 5 major disruptions, right? And so they are battle hardened. I mean, if we think about it, like let's just rewind the clock back to June of 2020, right? We were dealing with COVID. And then we were dealing after that with the bullwhip effect of inventories where, companies would order twice as much as they needed because they didn't know what they were going to get. So that created a challenge on supply chain. Then we saw inflation spike. So they had to manage their businesses with that inflation. Then we saw the fastest increase in interest rates in modern history. When they had to manage through that. And now we've seen tariffs and some trade disruptions. And unsurprisingly, after all of these, these battle tests, companies, both big and small, have been able to get through it, and and been able to continue to grow their earnings and grow their businesses. So through all of this, we want to remember that even though there are risks, that on the other side of this is you have very, very capable entrepreneurs and business owners who have been able to navigate challenges and still grow, and they are tuned up right now in order to be able to handle unexpected events. So again, from that perspective, that also, I think, something that you can ground some positivity in. So we'll leave that off here. And of course, if there's anything else in this you want to discuss, please reach out, whether by any means you wish, and we'll happy to have a conversation. Thank you. So over the last couple of weeks, we did see a cluster of questions relating to the frequency and the number of changes that we've made here over the last little while here in portfolios. Really, you can sum those questions up into the idea that, look, like you seem to be making a lot more changes than usual. What's driving that? So the drivers of that is very, very simple. I think that in many respects, the market and the market cycle have been reset by the volatility that we saw into April 7th and 8th. We take a look at gauges of investor sentiment. I think that's been reset. I think that the market has reset itself through that drawdown. And I think that we've seen a reset in policy as well, both in Canada and the United States. So in terms of investor sentiment, when we were in late 2024, early 2025, investors were very optimistic about the future. I mean, you did see articles in the press about potential Trumpian golden age, and quantitative measures of investor sentiment that I look at were all indicating that investors were optimistic enough that we here at the Kluge Wealth Advisory Group had begun the process of cutting risk into mid-January there. Now, that may have been the case, but by the time we got to April 7th and 8th, investors had shifted from that very optimistic state into a very pessimistic state. In fact, by some measures, investors had never been more pessimistic, and that includes during the great financial crisis of 2007, 2008. So in my mind, that type of a abrupt, very, very big rupture in sentiment is a reset. The other thing we want to look at is that the market reset itself. There was a 19.7% top to bottom drawdown on the S&P 500. Now, not quite the 20% level that demarks a official bear market, but close enough that we can say that the market did price in some sort of a economic reset here, or a recession, if you want to use that word. And from that perspective, the market has flipped the switch. The breaker was hit, and we reset the market cycle. And also, I would say from a policy perspective, we are seeing significant policy differences emerge from the Trump administration versus the Biden administration. And we're also seeing some very potential big policy shifts coming from Mr. Carney versus Justin Trudeau. So although I'm not taking sides or voicing personal opinion on any of these things, I just have to observe that the policy and rhetoric coming from both governments is significantly different than their predecessors. And so that, in my mind, also reconstitutes a bit of a reset on things. So if we're in a situation where there has been a reset, then we also have to look at resetting the portfolio, and that's what I'm in the process of doing. And again, I'll leave this segment off with a quote that I always love to quote from John Templeton, who's a legendary investor, and that is that just always remember that bull markets are born on pessimism, they grow on skepticism, they mature on optimism, and die on euphoria. So with that thought, we'll leave this question off, and we'll look forward to speaking with each and every one of you soon. Thank you. So, in summing up the Kluge Wealth Advisor Group Client Connect video for Friday, June 13th, we touched on some portfolio changes that we've made here recently to keep you up to date. We've also touched on a frequently asked question discussing our outlook for the future, which is optimistic. And then we also discussed a driver of why there's been a few more portfolio changes than usual here over the last few weeks. So if you have any questions on this or anything else or anything that's pertinent to your financial life, please be in touch. We're happy to have a conversation and make sure you get the advice that you need. Thank you very much, and we will look forward to talking to each and every one of you soon. Thank you.